Hello everyone, my name is Abhishek and I am going to share with you today economic news. India's GDP growth for July-September 2018-19 is 7.1% despite gross fixed capital formation, devoting investment activities growing by double digits. The reason being RBI increase in policy rate with growth coming in lower than expected and retail inflation could prevent the MPC from hiking rates. Also, fiscal deficit of India for April-October 2018-19 stood at 6.49 trillion rupees, which also affects GDP growth. The reason being the revenue receipts by the government totaled 7.88 trillion rupees, is very less compared to same period last year. Less tax revenue collections of 44.7% of budget estimates, increase in government expenditure of 14.56 trillion rupees. Contracting in mining, a sharp drop in manufacturing due to crude oil and natural gas also affected GDP growth in this quarter in India. And the slower growth in average income also pulls down GDP numbers. Over half of India's population, that is 51.4%, is self-employed. Regular or salaried individuals only account for 18.5% of the employment. The casual labor market, regionally disparity in average wages reflects a lack of demand for employment, hence affects GDP growth in India. Now I am going to share some more news on finance. Now the topic is Yes Bank promoter firms losses crosses 600 million. So Morgan Credit's MCPL and Yes Capital YCPL are two Yes Bank promoter entities which shows losses of 609.6 million rupees in 2017-18. Raised capital from mutual funds on the strength of their shareholding in the bank. The debt equity ratio of both companies is about 13. Their interest coverage ratio is less than 1. Both firms are investment companies. This means that they make most of their money through the shares they hold, including through dividends and capital gains. Now, second finance news. The topic is credit to NBFCs grew 55%. The analysis goes like this. Credit to NBFCs rose 55% against growth of 8.1%, and stress-laden banks had turned to NBFCs for on-lending, feeling the risk in doing so was less than direct lending. Also, credit growth for services was 27.4% compared to a rise of 9.4%, and credit growth accelerated to infrastructure, oil engineering, chemical and chemical products, food processing. Now there is one more finance news. Yes Bank stock fall pinches mutual funds. The drop in share prices of Yes Bank has weighed on the net asset values of several mutual fund schemes. Birla Sun Life Mutual Fund, Franklin Mutual Fund, UTI Mutual Fund were among the fund houses with the highest equity stakes in the troubled lender. Yes Bank is less capitalized and has higher dependence on wholesale funding, which makes it vulnerable to liquidity issues. The bank's daily average liquidity coverage ratio, that is LCR, is 99.4% for second quarter fiscal year 2019. Asset quality, potential divergence are major factors that could weigh on the stock. And lastly, one more finance news. The headline goes like this: Center mops up 170 billion rupees in CPSE ETF fourth tranche. The center has managed to raise 170 billion rupees through the fourth tranche of the CPSE ETF, a fund that accompanies 11 state-owned firms. The follow-on fund offering saw subscription worth 250 billion rupees, of which the government decided to retain 170 billion rupees. The 11 state-run firms that form the CPS ETF are Oil and Natural Gas Corporation, Coal India, Indian Oil Company, Oil India, Power Finance Corporation, REC, Bharat Electronics, NTPC, SJVN, NLC, and NBCC. Thank you.